Hey everyone, this is Michael Bengiat, and this is the Stock Picks weekend video for July 23rd, 2022. Here's our disclaimer. You can just pause the video and take a look at this so you understand it. And as usual, we're going to go just talk briefly about the current market environment. We'll review the stocks in our portfolios, and then we're going to take a look at the stocks on our watch and ready lists. So let's get started. Here we are. We're still in the stock and trading environment is yellow, which is basically cautionary. We're just not getting any traction yet on our positions or on leading stocks. Of course, everyone's frustrated by this. It's been going on for a long, long time. This whole year has been like this. It even extended into much of last year. So we have a good long period here of almost a year or so that the market's just been poor. But, the market came off of an extremely, bullish, overly bullish bubble period. So this is what happens afterwards. So we just have to be disciplined and patient, and we just, we tiptoe in. So far, our efforts have been mostly resulting in just minor losses, which is fine. We're not taking giant positions. We're not doing any damage to our portfolio. And that's just it. That's the way you have to trade. You're always looking at risk first. You don't want to be plunging in, especially these kinds of markets. Very easy to lose substantial amounts of money. So we've been taking half positions, quarter positions. We've just been keep dialing it down. But we're getting it's frustrating because we're getting enough stocks that look bullish and start to break out to keep us in, at least in interested in to take a few things. But yeah, they're not just really working. It's actually much easier when they just all fail and there's really nothing to buy, and you're just out. But that's where we are. So again, we saw a little bit better action earlier in the week, but we had Friday was pretty poor action again. So we're just that's where we are. So let's just go ahead and take a look at some stocks, and let's start with our growth portfolio. So let's take a look here. First one we have is Eli Lilly. Now, this one's actually what's holding up the best. You can see we're just kind of in a little trading pattern here. We're slightly down because we bought it coming out of this. Actually, I don't have the date here in front of me, but we bought it coming out of breaking above this little line here. It just hasn't done anything, so we're just holding in there. But it looks pretty good. Look, we have very strong RS rating. Outperforming, you can see this is the S&P, the black line. It has been just basically trending down. This is trending opposite up. This is what leaders look like. You want to see, in fact, you can see here, look, it was forming a cup pattern while this was actually coming down. You can even see here, look, we hit a low and this stock was breaking out into new highs. Now, the market, I think, is really holding it down because it hasn't made much progress while this has still been going down. But you can still see that their relative strength versus the S&P has been rising because it is outperforming, the market, and also most stocks. We're in the top 2% of winning stocks. Now, the good thing, though, is what we want to see is that while we're in this little, you can almost call this, some people call it a cap pattern, or it's a base on base. In other words, we have a base here, and it's forming another base. It hasn't had put in enough time to give us sort of through this algorithm here, give us an official base, but it will probably end up saying flat base, and it'll be like 3D. In other words, it's base count number 3. D just means it's a base on base, just like this one. You can see the cup was here. This one just built right on top of that. And this is probably a little bit more time will go by, and we'll probably see another base on that. This happens when the market is in a bear market or just overall market's not strong, and it's kind of just holding it down, almost like a spring. But usually when the market returns, these are the first stocks to just take off and just take off like this. It broke out really strongly here, but the market just pulled it back in. So looks really, really strong. So we're just sitting there. Hopefully we don't get stopped out. Our stop is at 315, 315.25. So yes, we're actually below this day here. So really, it really shouldn't break below here without really making the whole picture look pretty negative. So this low is 315.51. We also just like to put it a little bit below that. The whole stop is 4.9%, which is acceptable. We're we tried to keep them as tight as we can, but not too tight that, a regular move in the stock just would knock us out. Sometimes it happens, and sometimes it doesn't. So in this case, this was acceptable. We even could put it a little bit lower, but we're starting to get to the point too. You don't want to put them too near these moving averages because sometimes they come down there and just get support there and knock you out. Like here, it's starting to hold the 21-day here really nicely, but we did break below it. Probably what happened is that people put stops there, and at one point during the day came down, hit those stops. There were enough sell stops that it just sent it down. And then usually you see if you're looking like in a 5-minute chart or so, you'll see it immediately just start come right back up. So it was really just those people kicked it down just by hitting all those sell stops at once, and then it comes back up. So again, it shouldn't come down there again and kick us out. But that's a little lesson there in stop placement. The next one is company's called Stride. Ticker is LRN, and they are they do online curriculum for schools. Again, this one's been on our list a few times. It just keeps popping up because it keeps giving us outperformance versus the indexes. But it's been a choppy trader. I think we got kicked out. Maybe it was here. I think so. We might have been even once before. But this is what happens. If you get kicked out of a stock, most people will say, "That's it. I'm not getting back in that guy." I don't like that stock anymore. But more professionals will say, "Okay, maybe it kicked me out, but they just go get back in." And in fact, Investors Business Daily's founder William O'Neill had a rule that if you got kicked out of a stock and you went back in again, you always buy a little bit more, which I thought was an interesting one. Almost like saying, "Well, you got me the first time, but I'm going to go back in with a little bit more because it may be setting up even better than the first time," which is what's commonly you see. You'll see that maybe just wasn't ready. Like in this case, the stock obviously they were sellers floating around the 41.20 mark. We got a point where it opened up. Sellers all came in. Wasn't on earnings or anything, so who knows what that was. But they've come back in, and now you can see that we actually got past that 41.50, and we're now kind of at 42 area. But there still seems to be sellers floating around in the stock there. And let's take a look. There isn't any what we call overhead resistance until you go back to 2020, and that's really, we're over a year and a half ago. Really, that far ago tends to be too far back to really have an impact. Those people are probably long gone. The ones that bought here, they've already just sold, took their losses. Maybe there's a few hanging around, but really not enough at this point. Too much time's gone by. But for whatever reason, the sellers are they're just kicking it down here. So on this weekly chart, you can see we had a kind of a downside reversal last week. But overall, it looks really good. We're in it. We're up. We're actually down now slightly. Again, this is just that market. It's just been a tricky one. Breakouts, they only last a couple days, and we're just not getting enough move in these to take any profits. If we get up to around 10% or so, that's generally where in this market I will, maybe 8 to 10% will take some profits. We're getting there. We're getting like 3, maybe 4% at tops before it goes down, and taking profits there. But at the same time, we have our stops at 4 or 5%. Doesn't make any sense. You're trading 1-to-1, and you'll never. If you do that forever, you'll never make any money. In fact, you'll end up losing. So you're always trying to keep a 2-to-1, even better 3-to-1 ratio of wins to losers. So that's the market. That we're just not getting enough feedback. So we're sticking with it, but we're a little bit negative on that. Let's go to our long-term outperformer. Portfolio, which Humana. We are up 2% on this. So that's a major plus. Again, it's look at the outperformance. Even though we've dropped back a little bit. Ours is 94, but it looks pretty good. It's probably being held down by the market. We are getting days that during the day we're getting plunges, and they're all trying to close pretty much near the highs. So we have good closes. Good close here. Good close here, good close here. That was a bad close there, though. Good close here, good close here, 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 here. So there is support coming in on this stock by the end of each day. So somebody is just kind of waiting for those declines, and then they're coming in. Here you can actually see over here we have some of the top mutual fund ownership. And so here you can see the Fidelity Contra fund, which is really one of the best performing funds in history, has a little bit position in this. Pretty small, it's only 0.01%. But remember, this is a multi-hundreds of billions of dollar fund. So, if they put a 1% position on, for a lot of small caps, they would actually buy the whole company. And for mid caps, they'd own a pretty big chunk of it. So it doesn't show a huge position in this, but the fact that they're in it means they've done their homework, they like what they see, and they've taken a position of sorts. And you can also see just in terms of earnings, the earnings are really starting to ramp up into the 20s now and getting close to the 30s dollars a share. So, people sometimes say, well, yeah, Humana and these healthcare services are just raking in money because they're, the cost for hospitals and medical care is expensive. But that's what it is. If you want to participate, you can own the stock. Final thing on this, managed care is industry group 9 out of 197. A very good sign. We're in the top 10, not 10%. We're in like the top 1% really of these industry groups. So it's got everything going for it. A couple just final things. Nice volume spikes coming in here that are strong. Now we do have earnings in 4 days. I will put that on the chart. That's a little bit of a tricky one. If we don't have much of a cushion, there's actually a way. I will maybe show this next week. We have there's a calculator you can use by using options to get an idea what the implied volatility would be. So you can actually say, well, especially with these large cap, higher price stocks, it will give you an idea what it could be, maybe 3%, 2%, as kind of the expected range. So if it was a good report, it might go up 2%. Excuse me. If it was poorly received, could go down. Of course, it's really poorly received, it could go down anything. So we might use that in conjunction. If it's something that is probably not going to kick us out, then we might hang in there and just hope for the best. It's hard to tell. I think United Health had a nice earnings report, so that might help this one, be more received strongly, not poorly. Okay, so let's move on now to our ready list. These are stocks that are ready to buy. So the first one is Acacia Healthcare. This one has been popping up quite a bit. Again, we have a little consolidation pattern, almost really a cup with handle. You can see here's the cup with a little handle here, or you can even see like a little handle here. And then we broke out on Friday. Closed kind of in the lower half. The problem with this is that we have earnings in 4 days, which I will put on the charts too. So, sometimes these things can really take off before earnings, but since this is Saturday, it's really Tuesday, I think, is earnings, or maybe it might be Wednesday. So we might just have to pass on this just because earnings are too close and there's no time to get enough cushion. So unfortunately, that's what happens. Stocks tend to run up in front of their earnings, which is really kind of annoying, unless you already own the stock, because you're like, I'm not going to buy it now. Or they get extended, and then you have your earnings, and depending on if it's good, it keeps going, or it breaks down. So, the other one is Humana. We just looked at that. So let's go to our watch list. We have quite a few stocks, and it's kind of expanded a bit. We had just healthcare for a while. There's still a lot of those, but we do have a couple other names. Looking at this, no, we only have one other name besides healthcare. But we're getting a couple more biotechs, things like that appearing in here, which is interesting. So Lantheus, this stock is really interesting. We have a 99 RS. It's what you can call, some people call it a power play. In other words, a stock that's gone up 100% or more, and now is just kind of holding that gain. You can see here we were at about $30. We shot up to $60 really quickly, just in a matter of 3 weeks or so. And now we've been just kind of hovering around, a little bit of volatility. But we have fantastic earnings and sales. Look at, you have triple digits, 3 in a row. We have expanding margins, 5, 13, 32, which is really incredible. Sales, 15, 38%, 126%. So there's some major growth going on in this company. You can even see it in the annual earnings. We're jumping up now to $3, up 524%. That's estimate for this year. And so there's really something going on strong with this company. So we've been watching this, trying to get a position in it. We had a bad close, down almost 4.5% on Friday. It's been choppy, not an easy one to get into. There's really been no clear pattern, but definitely we're watching this for a place to get in. This is pretty much on, I'd say, at the top of the list of stocks I would like to own, and for this program here. So let's go to the next one, McKesson. This is one we were in and we got kicked out. We got kicked out on this little just plunge below the 50-day. That's the red line, and the 21 is the green line. We put our stop down here. It kicked us out anyways. And this is what happens a lot of times. It just comes straight right back. So we're watching it. So our buy range. Oh, actually, you know what? This is actually just popped into the buy range. So this really needs to be on the ready list. I will move it over there. But it's just a little bit. See, our buy range was right above this little consolidation here, but you can see we do have. Let me see if I can just draw a line here. That's gonna give me 1 second. These charts don't really give you very good tools. They have them, but a lot of times they don't work at all. Okay, so you can see, and once you draw it, you can't move it. Sorry, let me do it again. It should be a little bit lower, and I can't change the thickness of it either. One more time. Okay, one more time. Okay, that's close enough. So you can see here. Let's try to make it straight. There we go. It's a little crooked, but that's fine. So you can see that whenever it's been getting up around 334, 335, we've had 1, 2, 3, 4, 5 times that it's kicking it back down. So that's where the sellers are lurking. That's where the overhead supply is. So we're hoping, though, ideally, we just get a breakout that blows past all that, and a nice strong breakout. So we haven't seen it yet. We are just in buy range, but it's really kind of a little iffy on there. And you could buy it here. Earnings are still 11 days, so there is some time. So that will be on the buy list. I will move it over there. Again, strong stock, 98 RS, outperforming the market. Really strong earnings started this year. Jumped up from $17 annual to $23. Again, just like Lantheus, there's a lot going on here. Companies are really, improving, and it's good earnings and sales too. So let's go to. I think we did. Did we do Lilly? Yeah, we did Lilly already. That's on the list. Let's go to Vertex Vrtx. Again, another one, really strong margins, strong sales, strong earnings. Okay, we're kind of jumping up here too from kind of mid single digits. Now we're in mid double digits. Overall 99 rating. It was kind of a poor close here. It was holding the 21-day for a while. We closed below it. This one we were actually in and we got kicked out. And it's actually gone lower since we sold it, which is sometimes you kind of go, okay, thank you. Didn't just turn around and go straight back up without us. I think, again, market's kind of holding it down. Earnings are 12 days. Again, this is a company we'd like to own also. It's in the biotech realm, which is industry group 4 now. Interesting. And one thing actually I'll show you, let's go to the IBB is the actual Biotech ETF. But you can actually see, this is comprised of many biotechs. But look how this is just still in a strong downtrend. But if we go back to Vertex, look at the difference. So some of these stocks are actually the leaders in the ETF. And these are, of course, the ones that we're looking for. So again, great numbers, great growth rate. Let's go to weekly. Yeah, so we're actually coming back up to its old highs here. But again, this is going back a year and a half, September or so of 2020. So really not, those people are probably long gone. But you can also see here the outperformance on the relative strength versus the S&P, which is this line. So yeah, there's a lot going on in this company too. Good return on equity. The up-down ratio, that's a volume. Anything over 1 is really good. 1.7 is really strong. So it's showing that in the near term, there are bigger players buying this stock. But anyways, we kick this out. We'll just wait for another buy spot there. Okay, let's go to Fti Consulting. Ticker is FCN. This one we were in and got kicked out. Again, it happens. But really strong outperformer. Look, this one just keeps heading higher and higher, slowly but surely. And look at the S&P. Look at this. We like to see that. Earnings again. We're in earnings season, so they're all coming up. So we may just have to kind of just wait. We're not in this anyways. We haven't really seen a place to buy it at all. So we just watch that. But again, we're always looking for the strongest stocks that are outperforming, and this again is one of them. We have a new one we added, another biotech called One Biopharmaceuticals. Again, this is just like what we saw, that kind of what they call a power play. It was a $5 stock, and it's now got up to 20 in just not very many, a couple months, maybe a month and a half. So something going on here. Doesn't have any earnings or sales. You can see here minus. Yeah, earnings is just 2 out of 99 because there is no. But something obviously is going on behind the scenes. Maybe they got FDA approval. You'd have to look at it. But we like to watch these stocks carefully because whatever that is going on, this could just continue and be a huge mover. So you could look this one up. Their site is day1bio.com if you're interested in this one. Again, kind of a bad close, was down 6.25%, right down to its 21-day. But that's a stock to watch. And sometimes you don't find any news at all, like why has this gone up so much? And those are actually maybe the most interesting, is because something's going on, but there's really no news. And for stock to make this kind of a move on big volume means that there's something going on that most people don't know about. So it becomes kind of not priced really efficiently. You know, when you get to the big stocks like, Microsoft, Meta, PayPal, so much news, so many people following it, tons of analysts. They don't really get priced out of whack too often. But these smaller biotechs, this one trades, how many shares? Give me 1 second. Oh, 2 million. That's pretty good. Sometimes there's like really no trading. But you can see it wasn't very a lot for a long time. It was hardly trading at all. But now it's kicked up. So really good sign. We just have a couple more. I know these videos tend to run kind of long, but you gotta go through them all. So I hope you guys are finding this interesting and how to sort of properly analyze stocks and what we're always looking for. Cigna, another healthcare stock, been a little volatile. We haven't had a position in this at all. It's just not as clean as some of the other ones, but it's acting really, really well. Earnings are in 12 days. And then we have the last one is Astrazeneca. This is a UK-based medical stock. Sometimes with these, I don't think this is an ADR. Oh, it is. Sometimes with these you get a little more gapping action just because the main stock is actually overseas, and this is the version of it that trades in the U.S. So a little bit of choppiness. We're also not getting this tight trading we always look for. I haven't really talked about that much today. But here we're actually getting the opposite. We don't want this. We actually call this the megaphone. See, we're supposed to be getting tighter. In other words, when we're getting up to areas where there's maybe some resistance, we want to get up there but have no selling appear. But when we get up there again, now the selling is widening. In other words, we're getting a wider range. We don't like to see that. So, and this one's RS is only actually it's 91. Must have changed since I updated the charts yesterday. We're getting down to the low 90s. This one might get booted off the list soon. Depending on what happens, maybe next week it may be gone. We'll try to find something else. So really, that's it. I'd say at this point, we've really got our eye on Lantheus, ticker LNTH. Vertex, another one with very strong fundamentals. And it's a tricky market. If anything, we took quarter and half positions that I mentioned earlier, got kicked out of them, very minor losses. It's just part of the game. But we really haven't had any way to put on any large positions for like a year. And that's good because we really getting hit hard. So just continue to have patience. This is a time that if you're new, you want to learn, see what we look for. It's no problem. Even if you say, yeah, I want to get involved, and you just buy 10 shares. I mean, sometimes you do, they call it a mental health buy, where you just go, you know what, I just want to be part of the market, but if, since it's not very good, I don't want to lose really anything, so you buy 10 shares. I've actually tried to get, not long ago, I got filled on a stock, and whatever reason, I got filled with one share. and it actually, unfortunately, turned out to be a pretty good winner. One of the few, I think this was about a year ago or so, it actually went up 15 to 18%. I had one share, and I just couldn't buy any more because it just took off. So, and of course, the ones I had more shares in, didn't perform or stopped me out. So anyways, I finally sold my one share. Luckily, there wasn't any commissions because the commission would have wiped out, more than half of the gain that I made. But anyways, that's what happens sometimes. And that's an extreme case, but, in fact, there's a saying is sometimes when you're trying to buy, if you have a bigger account and you're trying to buy a lot of shares and you can't, in other words, it's hard to buy, it's actually a really good sign. But anyways, we just have to be patient. We just don't plunge in. As you can see, we're always just, making little tests. And for the most part, this whole year, those tests have been failing. And we're not really getting anywhere to the point we could actually even take any profits. At some point we might. I mean, if I can get tighter and tighter stops, if I can find a stock that, we have maybe a 2% stop and it goes up 2% or 3%, I'll probably sell it. Because we're trying to always keep that risk reward. You don't want to have taking gains at 2% and your stop was 3%. And that's a recipe for losing. But if you can keep your stocks really tight, 2%, 3%, and your gains are now, 4 or 5%, you're keeping at least a 2 to 1, and you can start doing that. But we're just finding it's hard to find anything where the stops are, under 3%. So, and we're not getting 6% gains. Okay, that's it for this week. We'll be back next week, and hope this has been helpful. Any questions, you can always email. It's Michael at lifetimeinvestor.com. Okay, thanks.